Hi, everybody. This is Alan Elman, the Blue Collar Investor, and I've created this video to show you a couple of covered call trades that I executed 2 days ago on Tuesday, May 20th, expiring on June 20th. So it's about a 1 month, 32-day trade to be exact, four contracts, covered calls, using both defensive and more aggressive approaches. So these trades are with Shopify Inc. listed on the Nasdaq under the ticker SHOP. This is a security that has appeared on our premium member stock list periodically over the last few years. It's been an elite performer. Not always, but currently it is. Okay, so that said, let me show you why I selected Shopify. And this is a little snippet from our most recent premium member stock report. And let me just show you the things I liked about this security on Tuesday when I entered this trade. So you can see here where it says other, that means that it came from the BCI database of securities that we've identified over the last 18 years as potential option selling candidates. And we always screen that list every single week for our members. It's in the software industry, which is at the time currently rated A, the highest rating. Now, if you take a look at the mean analyst rating, you see 1.82. That also is excellent on a 1 to 5, with 1 being the best. Once again, on balance volume, cash flowing in on up days, minus cash flowing in on down days. You can see the up arrow indicating that also is a bullish signal. Now, there's no dividend. And if you take a look at the implied volatility, you see 52.1. So that's a very robust implied volatility, which means we're probably going to get pretty good premium returns. Gives us flexibility of going a little deeper out of the money or in the money, depending on which approach we decide to take. We also have to be worried, or at least aware of the risk on the downside. But with covered calls, we'll always have our 20%, 10% guidelines in place. Now, there is adequate option liquidity. The open interest is good. And the earnings report date of 8/7 does not interfere with this particular contract. And Shopify just recently entered our premium watch list. Welcome aboard, Shopify. All right, now next I want to show you a 1 month price chart of Shopify, which is this red line on the top, compared to that of the overall market, or the S&P 500, which is this blue line on the bottom. So you could see here that in the last month, Shopify has been performing quite well in comparison to the overall market. Now, let me show you the initial returns. Now, I bought 400 shares of Shopify, and 300 shares I took a defensive position selling an in the money covered call. So I purchased the shares at 107.68. I did 3 contracts of the 98 deep in the money call that generated 11.95. Now, is all of that 11.95 profit? No, because we're going to be losing $9.68 on the sale of the stock. So the actual time value component of the 98 in the money call is 227, which, by the way, is precisely the time value premium we generated with the deep out of the money 117 call, also 227. All right, so now let's have a look at first the in the money call generated a 32-day return of 2.32% that annualizes out to 26.42%. Now, of course, within the money strikes, you have downside protection of that time value profit, in this case, 8.99%. That's in the purple cell down here. That means we are guaranteed a 2.32% 32-day return as long as share value does not decline by 8.99% by expiration. That's different than the protection to the break-even price point, which is even much greater than 8.99%. Now, let's have a look at the out of the money 117 call, which generated 227, and that will give us a return of 2.11%, once again 32 days, 24.05% annualized. However, there's a possibility of an additional 8.66% if the price of Shopify moves from 107.68 up to that out of the money 117 strike. So there's an opportunity for a greater than a 10% 32-day return. Now, since I'm leaning more defensive than offensive at the beginning of 2025, you'll notice that 3 of the contracts were in the money and only 1 was out of the money. And that's called laddering the strikes. You'll also notice that the break-even price points are quite different. For the in-the-money strike in the yellow cells here, that's 95.73. And for the out-of-the-money strike, it's 105.41. Now, I want to show you the actual broker statement that I have confirming these series of trades. Number 1 is where I purchased 400 shares at 107.68. Number 2 is where I sold the in-the-money 98 call, generating $11.95 per contract. That's almost $1,200 per contract. Now, most of that is intrinsic value, not profit, but still a very nice return, as you saw before on the trade management calculator. Number 3 is selling the 1 contract, okay, over here, of the out of the money 117 strike, and that generated a fill price of 232. So it's actually a little bit more than what I had in the spreadsheet. Okay, now I also put in my 20% buy to close limit orders. So for the in the money strike, it was $2.40, and for the out of the money strike, it was 46 cents. That was 20% of the premiums that I received from these in the money and out of the money contracts. So these are good till cancel, these limit orders, which means you don't have to be in front of your computer 24/7. If the price of the stock drops substantially, causing the threshold to be reached and the call options are bought back, then we will be notified by our broker, and then we can decide what our next steps are going to be. So our initial combined time value, not the intrinsic value, comes to $908. The amount that we spent on the shares is $43,072. That means our 32-day unexercised return is 2.1%, annualized out to about 24%. So you can see very significant returns, even though for 3/4 of our trades, we took quite defensive positions with a lot of protection to the downside. Now, remember that the 117 out of the money strike also gave us an opportunity for an additional 8.66%. So we could do even a lot better than that 2.1%. Here we are, 10 a.m. on Thursday, May 22nd. I updated what happened. Now, Shopify, if you'll notice, dropped in price. At 10 a.m., it's trading at 103.70. Why? Because yesterday, after I entered the trade, Tuesday, after I entered the trade, Walmart and Target came out with negative guidance. And that was because they're saying they have to raise their pricing because of the tariffs. That, along with the fact that Fed Chair Powell also talked about the tariffs impacting the global supply chain, which may impact our economy and actually the global economy in a negative way. And that spooked the market. So the market went down significantly, as did Shopify. So that's what we're dealing with. It came back a little bit today, Thursday. So currently, the price of Shopify is actually $3.90 lower than the price when I initiated these trades, but it's $7.97, still above the in-the-money 98 strike break-even price point. However, it's $1.71 below the out-of-the-money 117 strike break-even price point. So I'm still in really good shape with the in-the-money, and right now showing a slight loss on the out-of-the-money. We're still pretty early because we have to go through the mid part of June for the expiration of the contract, June 20th. Now, neither of the 20% buy to close, good till cancel limit orders have yet been breached. Okay, so even though we are down on the stock price, we still haven't gotten to the point where we need to take any exit strategy manipulation. Let's summarize now. Significant returns can be generated with a 32-day defensive and aggressive covered call series of trades. We can craft our trades to align with the current market environment. I view this as volatile, uncertain, kind of bearish market conditions, and that's why 3/4 of these trades I took a defensive posture. Now, the initial result of these trades with Shopify were impacted. The negative impact was due to the overall market decline with the issues I alluded to earlier. So, ladies and gentlemen, that ends this video. I'm going to keep making them because your feedback has been very positive. Keep letting me know what you're interested in getting from us, and we'll be happy to provide that for you. So that ends this sample video trade with Shopify, aggressive and defensive 32-day covered call trades. And by the way, we get this, all of our underlyings, we get them all from the BCI Premium Member reports. Folks, thanks very much for taking the time to listen to this video. I hope you enjoyed it. But most importantly, I hope it puts cash in your pockets. As always, this is Alan Ellman, the Blue Collar Investor. Take care, everybody.